Good afternoon, ladies and gentlemen. It's lovely afternoon today, and another good opportunity for us to talk about dollar and gold. So, from our last discussion on Tuesday, before PPI was released, I had called for lower prices on dollar since it was in a premium, as I had mentioned, and it had also taken out this level of buy side liquidity here that we had anticipated to be taken out from when price was down here. Um, the drawn liquidity I was interested in when price was still here up here on Tuesday was the daily buy side imbalance, sell side inefficiency. This buy side imbalance, sell side inefficiency, the consequent encroachment of it. That's the midpoint of this daily BC. And as you can see, price delivered perfectly to that, and even offered a deeper run into the lower quadrant of the daily BC, and even delivered back to this daily order block here. So our main interest was to see whether we had whether dollar was weak enough to at least give us the daily BCCE, this consequent encroachment here, that is the midpoint of this imbalance, as our major draw on liquidity. And as you can see, price had a really easy time reaching for that, and even went ahead and delivered even more than what we were anticipating. And that was just beautiful to say the least. And if we can maybe do a quick review on what happened in terms of intraday price action on the same day. Let me use a chart where I can drop down to a lower time frame. Let's see. Yeah, let's use this one. So this was Tuesday. This was when we were calling price, and as you can remember, um, I was anticipating the London liquidity to be challenged before we see a continued move lower that will challenge both the London low and also reach for the consequent encroachment. This is the consequent encroachment of that daily BC, this one here, that we wanted price to reach for. Let me show you. Sorry for the annotations, but if you look keenly, this is the level I'm talking about, this midpoint here. So if we go back to the lower time frames and study what happened during that day, um, we come to the conclusion that even though price wasn't able to take out the challenge, the London liquidity here, and maybe this one here, it was still a valid sell idea, because if you could have used your fib like the way I did as I was doing the presentation, then you could have realized that we actually did trade to a intraday premium before we went lower. And the fact that we didn't even have the strength to take out to challenge the London liquidity was even a stronger confirmation that intraday bearish pressure was very, very high. And that alone was enough to support bullish ideas on gold. And it was such a lovely delivery. And we haven't seen uh, we have seen a sort of a bounce back today. We have redelivered back to that midpoint of that imbalance. But our main trade idea was framed on seeing dollar drop lower into that imbalance and use that weakness as a supporting idea in terms of intermarket analysis to support um, hunting buying opportunities on gold. So, without further ado, let's also look at gold. And by the way, I never trade dollar. I just use it as a guide on how to trade all the most rather. pairs that are correlated with it. I never trade the dollar. I just use it as a guide, more like as more of like an indicator. Yeah. So as far as gold is concerned, if we look at this higher, we look at the higher time frame first. Let's see. Let's use this. Yes. Um, yeah. Let's just use this one. So if you can remember, as when I was doing the review on Tuesday, price was down here. This was Tuesday. Price was trading around here, and I had mentioned that clearly from the previous week, gold had shown a respect for discount sensitivity based on how it behaved inside this daily buy side imbalance and side inefficiency, because as you can see the wicks were, yeah, they were doing the damage, even coloring outside the lines a bit, that is overshooting past our array. But if you study the bodies, and that's where all the volume is, that's where all the prices that matters are, and that is how we derive narrative. If you look at the bodies, most of them are being maintained. Number one, inside the fair value gap, as you can see, no bodies have closed outside the imbalance, and also most of them also even being maintained above the consequent encroachment of that buy side imbalance, sell side inefficiency. And as of Monday, we confirmed that uh, discount sensitivity had been favored over premium sensitivity when we had this um, impulsive move higher that even challenged this high, which, as far as premium sensitivity was concerned and expecting bearish pressure, wasn't supposed to be challenged if indeed price wanted to go lower. But this price action on Monday, and also the way the bodies were behaving here relative to the wicks, that was confirmation that we were bullish, and that's exactly what I said on Tuesday. And then I called for, as far as drawn liquidity is concerned, I named four specific levels as potential draws on liquidity. We were still here, imagine. We hadn't even delivered up to here. But my first level that I wanted price to reach for was the 25% of this premium week, and then 50% of that premium week, and then 25% of that premium week. And then I said, if we will still be showing strength, then obviously the consequent encroachment of this daily sell side imbalance, buy side inefficiency was obviously the next draw. So those were four premium levels that I called before PPI was released, and saying that all these levels are likely to be reached for because of the discount sensitivity we have seen from the previous week's price action. And as you can see, all those levels were delivered to perfectly. It's like clockwork, man. Like it doesn't get better than this, folks. This is just too perfect. And if I drop down more to the lower time frames to now give you a glimpse of what that could have looked like in terms of opportunities you could have hunted for, that takes me back here. This was the day when PPI was released. So there's this shaded area I've marked here. I had forgotten to share this array with you that day when I was doing the review, but it was marked in one of my charts. I just forgot to show you guys. So there was this 4 hour. Let me even annotate it. It was a 4 hour buy side imbalance, sell side inefficiency. So we call that a 4 hour BC. Yes. So there was this 4 hour BC here, and during London of the day we had PPI, price traded into the upper quadrant of that buy side imbalance, as a 4 hour buy side imbalance, sell side inefficiency. So I had anticipated that PPI would give us, ideally, would give us some form of manipulation. That is, it could have challenged the London law and probably traded to the consequent encroachment of this before going higher. I didn't mention this level before, but I had said um, I would have uh, wished to see a retracement back into the discount range of this of the previous day's price action relative to Tuesday's price action. But as you can see, price wasn't even able to even drop into the equilibrium, and furthermore, it wasn't even weak enough to try and even challenge the London liquidity. And it tried here, and it even came again and tried here, but all that, it wasn't still able to challenge this liquidity. And this supported the idea that bullish pressure was really, really present in gold during this day. And in terms of entries, if you are in front of the charts that day and you listen to my live and wanted to get in sync with such a trade idea, I'm going to show you how you could have done that based on how I personally entered such a trade. So if you even look at my Instagram, I shared my entry down here. This is where I secured my entry, and the entry was based on a very simple entry model. The first thing is that we have this 4 hour buy side imbalance, sell side inefficiency. That's our higher time frame array. And then the second thing is that we had already have had a liquidity play whereby during London we took out the Asian liquidity. This is the Asian range, and we took out that low and then traded to that higher time frame array. And then we had the first attempt to try and take out the low, the London low, but it failed. And then later during PPI was released at around 9:30 a.m. New York time. That's 4:30. We had another try at that, but we only managed to take out the initial sell side liquidity for New York. New York begins from 7 a.m. 7 a.m. New York time. So we had created this low during New York, earlier on during New York, and then later on now during the opening bell at 4:30 when PPI was being released, we took out that low, but still respected the London low. But then at the same time also traded back to the upper quadrant of this 4 hour buy side imbalance, sell side inefficiency, and then we showed respect, or rather not respect rather, but we showed a change instead of delivery after this start also, and we showed respect of this London law. So this was a very, very strong signal, and that is why I comfortably executed on this trade here. And the risk to reward was based on this. Before even talk about the risk to reward, let me show you the fact that my entry was exactly at 10 a.m. and that was inside of the a macro. Which mark? The macro that precedes, not precedes, but succeeds the, or rather follows the opening bell. After 9:30, the next macro we have is between 9:50 a.m. to 10 a.m. New York time, of course. So that was the macro I was interested in. Remember, when we are trading ICT concept, price has to align with time. Otherwise, we are. So price, what price are you talking about with this order block here? So the price was that opening price. That's where the change in state of delivery happened. And what time are you talking about with Mark? I wouldn't have entered that trade until we entered the macro phase, and then I saw a delivery back into that order block, and that's how I framed my trade idea. The stop loss could have been placed just at that low, and then this was the first level I'd called as the first drawn liquidity. And as you can see, even that level alone could have yielded a nice risk to reward um, play. That is a 1 to 4, easy 1 to 4, and this is gold, man. So depending on how you are doing your risk management, this was a really good trade. And apart from that, as you can see, we later on retraced, but that low was never challenged, even into the next day. As you can see, that low was never challenged. We were here. Our entry was down here. Not here, but here. Our entry was down here. As you can see, price delivered higher. Now this is Wednesday price action. It was a bit choppy. It never really went anywhere. It accumulated around those three levels. And as you can see, even after that retracement that happened here, I mean here, this retracement that happened here, we still continued higher and delivered to the rest of the other two levels. That is now 50% of that daily premium week, and 25% of that daily premium week. And then after that, Wednesday didn't really do much. But then on Thursday, we also had a really nice play that was also presented during the same time window, um, and based on the same criteria, but now we used a different entry model, or rather we could have utilized a different entry model. So this was what was presented to us on Thursday as price action. We saw a rally um, after consolidation during Asia. We saw a rally. Then after that rally, we had multiple attempts trying to take out the initial London low here, and this one here as well. This was the main London low. We had an attempt to take that out during New York, but we failed right there. But instead, we took out the London lunch liquidity. London lunch begins from 5 a.m. New York to 7 a.m. 7 a.m. is when New York begins. So we had some liquidity there, which we took out during New York, but we respected the London low the same way we did during Tuesday. And then after that, we had a displacement higher, and that was proved through the creation of this fair value gap right there. And so if you could have utilized the same uh, how is it called, the same ideas before, and trade this macro, the 950 to 1010 macro, you could have been filled, or rather you could have entered within this fair value gap, and obviously your stop loss could have been down here. So such a trade could have also yielded you a really nice uh, risk to reward opportunities, because as you can see, we had a very we had by then this initial London high by side liquidity as a draw. We also had the previous day's high as a draw. But from our higher time frame analysis, since we had already traded to all these three levels, the remaining drawn liquidity that we hadn't traded to was this consequent encroachment of the daily sell side imbalance, buy side inefficiency. And guys, look at that precision, man. And now these could have yielded you a 1 to 6, you know, risk to reward opportunity, and it stopped there, folks. Like that's why I love ICT concept. It's just so precise. You know, we're not dealing with zones, we're not dealing with anything. Don't even mind this. Like this trade alone to this, based on the idea I had shared earlier on, was enough to make you good money, man. And you could have had even scaling opportunities at this high here, and then left something on for, the last drawn liquidity that we are talked about. So it was a really nice play, and uh, I don't know, guys. You should join us at Voltman, so that you be part of such moves and understand the mechanics behind arriving at such trade ideas. But that will be all for me today. Um, See you next time we have a discussion. But otherwise, enjoy your weekend. Good luck and good trading.